Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, in the last 24 hours, the Australian dollar so far has failed to stage any significant moves as the market price continues to hover above the 66.5 key support and contained by the resistance of 67.65. In economic data, according to the Australian Bureau of Statistics, or the ABS, the gross domestic product, which was the GDP, printed 0.5%, which was lower than the forecast of 0.8% with the previous of 0.7% previously, while the CPI number for January eased by 7.4% from the expectations of 8.1 and the prior release of 8.4. So today's CPI numbers will give mixed views on how the RBA will approach its monetary policy in March. Nevertheless, we've seen a slightly firm price action here with the RSI picking up along with the MACD. May see further up test, but beyond 67, 65 may struggle due to the fact the dollar index, which measures the greenback strength against a basket of 6 major currencies, has rebounded from 104.5 to briefly touch 105. So I still feel there is much pressure to come for the Australian dollar, but may hold around that 66.5 cent region. With February finishing, the market's still a little bit mixed in terms of how low the euro can go. Presently, the support holds around 105.2025. After the whipsaw price action overnight, the market is attempting to claw back some of those losses, but the technicals are still holding to a negative bias, and therefore any upside attempts towards 106.40 may fail, and looking back towards that bottom side of the range, anywhere from 105.65 to 105.2025, where profit taking may emerge. The dollar yen still maintains its bullish stance since breaking above 136 and still very much from a broader aspect holding to 140 to 142. I feel that any pullbacks will be limited as we've seen over the last few days and therefore will continue to keep the bullish bias until at least reaching part of its objective around 137.90. The pound, while the market was whipsawed overnight after rejecting the 121 level, is now focusing back towards the bottom side of 120, maybe even down to 119.60 due to the mixed technicals. But the MACD, keep an eye on this as it does break higher, may enforce another upside test, but not presently at the moment. The rebound in gold, well, the technicals don't fully support it, but nevertheless, from a dollar index point of view, the market can still rally, so therefore could see the top side limited towards 1,832 to 33. If so, that would turn the focus back towards the bottom side, anywhere from 1,808 to the target holding at 1,786.29. And wrapping up with oil, the market rebounded off the base here around 75.5 and currently looking towards that top side 78, 70, 90. And I feel from there may find a bit of difficulty. So I'm not going to get too bullish at the top side of the range as we still can see a turn to the downside again with the boundaries holding at 76.5 to, as I mentioned, around 78, 70, 90. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the news report. I hope you enjoy the rest of the day.